Thanks for tuning in to another episode of Around the Coin. Today's guest is Hany Rashwan. Hany is the co-founder and CEO of 21Shares and Amun. 21Shares is the world's largest cryptocurrency ETF issuer. They have ETFs available, or ETPs available in different markets throughout the world, notably not in New York or not in the US. We talked about why that is. We discussed Amun, the concept behind Amun, which is similar to 21Shares, but it is crypto first, so it's not in the stock market. We covered a lot of ground. We discussed how they started the company, what the concept is, how accessing Bitcoin and other cryptocurrencies through public markets is so important, how they were able to do that before pretty much anyone else. And he threw out a few great recommendations, Ben Townsend, Noah Smith, the Bitcoin Standard, and others. I hope you enjoy this dynamic conversation with a good friend of mine. Here is Hany Rashwan. Hany, I'm excited to chat with you, man. It's been a while since you and I have talked, but yeah, a long time. And we were talking a few minutes pre-show about the structure of the organization. I'd love to just start there, and then we can build the house on that foundation. But yeah, walk me through just the general business entities and what they focus on.
Sure. So the most important thing to note is all we see ourselves doing is building bridges into the crypto world. Now, depending on who the end customer is, there may be a different package, a different wrapper that is most appropriate for their customer. So let me give you an example. We don't think anyone wakes up in the morning and wants to buy a Bitcoin ETF or a DeFi index ETF. They wake up and they want to buy Bitcoin or a DeFi index and get some exposure to that space. Maybe that index is best in a token format. Say if you're crypto or tech native, or if you live somewhere in the world where accessing a MetaMask Ethereum wallet or a Phantom Solana wallet is easier for you than European stock exchanges. Maybe you're a professional investor or want a security or don't want to manage the custody, certain age brackets, certain regulatory requirements, depending on what you're doing. You really want an ETP, an exchange traded product, whether that be an ETF or ETC or ETN, does not matter to us. And so the way we think about it is our job to provide that underlying product in every single wrapper, in every single format possible. Think about WhatsApp or Dropbox having not just a Mac and a Windows app, but all of the other operating systems as well. So the main company is 21. That's where we all work. And all of our mission can be just simplified as building bridges into the crypto world. The way we do that is primarily today through 21Shares, which is the world's largest issuer of crypto exchange traded products listed on stock exchanges around the world, as well as Amun, which does very similar things, but on the token side. And so it's tokenized products. And then underneath, we also have a third brand called Onyx, but that is the infrastructure that powers all of this, that issues the ETPs and manages them, that issues the tokens and manages them, both for us as well as a few other firms that also these products.
And did the third business roll out of or spin out of the existing first two? I mean, you basically, similar to other companies, right? When you build a product, you kind of create a foundation on which you then build the end consumer facing. Did you recognize that through that foundational building process, you could spin that out, and that's what gave rise to?
So no, not at all, actually. It's a bit of a funny story. Onyx was there from day zero. We're primarily known for listing the world's first crypto ETP. There had been a few random trusts or exchange traded products that weren't necessarily collateralized by anything underneath, where you had to depend on the credit worthiness of someone you've never heard of. What we did first is in Switzerland, which was the first place to allow this, built a physically backed crypto exchange traded product. And if you remember, in 2011, I think 2012 or thereabouts, there were a bunch of people that are big in fintech and crypto, the Winklevoss twins, Silbert and DCG, that had tried and had been, by the time we started thinking about this in 2018, tried and failed for 6-7 years to bring about a Bitcoin ETF. anywhere. And we managed to speak to 27 different jurisdictions, really thought about where could we do this that would be best. We correctly identified Switzerland as the most fertile ground there, and were able to list it first. But the funny thing is, in February of 2018, we listed in November of that year, but in February of 2018, we got approval. We got regulatory approval to list this thing. And we were terrified because we thought someone would beat us to it. It's so obvious. And we're just a 2-person startup with no resources. And that's when it came to the next step of, well, how do we actually bring this to market? And basically none of the traditional financial players that would normally be the ones that do this issuance and administration platform either wanted to work with us or were capable of working with us. And through that mixture of both, we had to create Onyx in order to bring about the world's first crypto ETP in the first place. And then I think a few months later, we started speaking to other asset managers and banks and other customers, including an American company called Bitwise, a Swiss bank called Signum, Bitcoin Suisse, which is large, and a bunch of others that we can't publicly name. And then we started opening it up to third parties, because from our perspective, a great tide lifts all boats. And we're just looking to get as many people introduced to crypto as possible. It's primarily through our products, but if we get people in the ecosystem that have their own strategies, that have their own ideas, we would love to bring them to market as fast as possible as well. So that's the story of how we, in the end, ended up building this full stack end-to-end issuer on tokens, on securities, with all the underlying infrastructure.
I'm surprised that there wasn't more capital requirements or just general bureaucratic overhead that goes into getting approval in the first place. So with 2 people, I imagine you had some small seed round. I mean, nothing compared to like a large institutional or large fintech company. Was it just a matter of timing, some degree of being in the right place, saying the right things? Was the approval part not the hard part, and then it was a matter of going out and building this Onyx tool?
I think they were all the hard part. They're
Yeah.
just very different kinds of challenges. So we raised a normal seed round. I think it was somewhere between 2 and 3 million in total. And you've done early stage startups before. Legal fees can pile up. You have to be very, very careful. And especially if you build a seed stage startup, you need to survive and show proof quickly enough. And you need to therefore survive long enough to do that in order to survive. And we're a historically profitable company. We've been profitable since December of 2019, but that wasn't the assumption going into it a year and a half prior. We were very, very careful with costs. The way this actually worked and the way we were actually able to do it is we would do all of the work ourselves as much as possible. You get the advice to do things that do not scale. The reason we ended up being able to do this in Switzerland is we called very competent Swiss counsel. It's wonderful and costs a ton, but the call wasn't, can we do this? Can you discover it? Can you discover and explore for us? The conversation was quite literally my co-founder saying, I was looking at the regulatory framework in Switzerland for the exchange, and I noticed an article on page 167 towards the bottom that we think could be applied in this way for what we want to do. Is this a correct reading of that? And neither one of us are lawyers and neither one of us had done this before, but we sort of just really worked very hard on doing all of that. And that is when the lawyers then said, yeah, this should work. Let's triple check with the regulators and the exchange and the other service providers. And that's actually how it ended up happening, except not just in Switzerland, but we did this in 27 different jurisdictions around the world over probably about a 9 to 12 month process.
And was there initial upfront registry? Like where do you think the other companies failed? Because there's certainly a degree of research you have to go into. You have to, due diligence legally to figure out how you can carve out the space in which you can operate. You have to, submit the right paperwork. All that seems like kind of table stakes to get into the game, especially for something as big and kind of like what you said, obvious as a Bitcoin ETF.
I think the single biggest mistake that everybody did is have an over focus on primarily America and the United Kingdom. you got a lot of people that wanted to list it in New York or London. And obviously we're working on both of those. One of them is obvious because it's very public, and we're doing it with Cathie Wood and ARK, but we didn't think that was going to be the first to list such a product. And in fact, we didn't think that it needed to be the first to list such products. It's much easier to turn around a sailboat than an oil tanker and all of that. And so I think the biggest thing that we really considered is we were looking at what is the best base from which to first build and then expand, rather than what is the most ideal market that we want to end up in. And, it's 2022. We still don't have an ETF in either of the jurisdictions that I mentioned from anybody. And I would say that our bet was very, very, very on point. And it was our competitors ignoring us and looking at this as a financial backwater that's not of significant scale, that doesn't matter. It's the 10th largest stock exchange in the world, by the way, or thereabouts.
Switzerland. And does this operate independently as just Switzerland, as part of it? If I I don't know much about the EU.
Switzerland is its own thing. So there's the European Union, which, famously Britain wanted out of, and you get Brexit. Mm-hmm. Switzerland had never been in the European Union. They don't really do alliances and things like that super easily. They guard their neutral status as a holy matter. And so Switzerland was its own thing. But where we actually, and that was all helpful, right? But where we actually really bonded well with the Swiss was over crypto itself. Even at that time, Switzerland was calling itself, there was a crypto valley there. There was a community that was started there. And you would get politicians who would come in and say, no, it's not Crypto Valley, it's Crypto Nation. Don't just give, because Crypto Valley was one canton or state of the country. Like, no, this applies to the whole country. We're really into this. And you got, political parties of all shapes and stripes very much agreeing that crypto is interesting enough, probably here to stay. And if it is, they need to make Switzerland at the heart of it. And we didn't get as much political buy-in from everywhere else. And it was quite early. Like, the Swiss were very early and brave. But I think that if you look at the history of the country, it makes a ton of sense. This is a country where the federal tax rate is something like 0.5%. And then you pay anywhere between 15 and 40% on the local level, because states get to determine the taxation. It's an incredibly decentralized governance model by default. You can talk a lot about how the Swiss have had a long history of trading gold and custodying it, and Bitcoin being digital gold, which was, by the way, our argument. We initially used the structure that's made for Swiss gold to custody digital gold. That was the whole innovation. And obviously the Swiss have a very rich and long history of doing that. And then Zurich and Geneva happen to be financial centers. They're very large, especially in the private wealth and asset management, wealth management in general space. And while not being of the scale of China or America or even Germany, was of a significant enough scale with significant enough support, and with Germany and the rest of Europe next door, and with everything else within very nice striking distance from Switzerland, we really thought that it would be the best base possible, where we'd have support at home. We have no problems at home. And in fact, the success of our company, and actually the success of our entire industry of crypto, is a net positive, inarguably, for the country that we are in. And so all of these things coalesce together in a really beautiful way, where then everything we've built today was made possible.
How many other ETF, Bitcoin or any crypto related ETFs are in the Swiss market now?
So that's the funny thing. We got a lot of asset managers, big guys, primarily American, who scoffed at our listing in Switzerland. And they're basically all there now with much smaller asset sizes than what we have. And so I think at this point, if you want to physically back crypto products, Switzerland is typically the first stop, if not one of the first stops. And I would imagine there's probably a dozen or more today,
Yeah.
but primarily much more minor, obviously, as time goes on.
And who can purchase that? I mean, you don't have to be a Swiss citizen. I mean, who can buy into this ETF given that it's in Switzerland?
So essentially, we have users from around the world. We restrict retail users in the United States from marketing or advertising or anything like that, because the United States has pretty restrictive rules, and we're very respectful of them. One of the core tenets of the company is we're not looking for any backdoor listings. We want to go through the front door in every single jurisdiction, and we want to not compromise on the product quality, which is why we haven't listed some of these imperfect products for the American market. But essentially, it's around the world. I would say 99.999% of our revenue comes from outside the United States, and dominated by Europe, where we're a pretty large player, as well as a ton of traffic that we see from every continent, with a concentration in the Middle East and Asia as well.
So I guess just speaking about the market,
Retail and stock market, by the way, which is very important.
Yeah,
Because
gotcha.
we believe in retail accessible products. So most of our shares are somewhere between probably $10 and $30 per share. And we have, while the bulk of the AUM comes from obviously larger institutional players, family offices, bigger funds, etc., the bulk of the people, like by count, are obviously retail and retail from around the world. If you can access a European market where you can buy Lufthansa or UBS stock, you can buy our product.
And is that available to people outside? Speaking from the marketplace itself, do they restrict participants in other countries? Like, can people in the US go and just sign up online and start buying your ETF on the market today?
There's nothing that prevents anyone from around the world of getting access to any stock exchange and purchasing them. You and I can sign up for a brokerage that gives us access to, say, the Thai stock exchange and then purchase shares there. In America, we absolutely don't do any advertising or marketing to really just about anybody, but especially on the retail front. If you go to our American website, it's quite different. Whereas in the rest of the world, our website is readily available with all of our products. And it's not that difficult for, say, someone in Singapore or Malaysia to set up a bank account or a brokerage account that has access to these top European exchanges. If you think about it now, we're on the German Deutsche Börse, we're on the French and Dutch Euronext, we're in Austria, we're in Sweden, we're in a few other places, we're in Australia. So there's a number of ways that you can access our products. And these tend to be like in Europe, I think we're on the first, second, and third largest exchanges within the EU. And so pretty easily accessible products most of the time. I touched on this briefly at the beginning, but we also have token versions of some of these products. And the way we see them is primarily accessibility in geographies where we're not present. And so we have users out of Ecuador and Guatemala that want to purchase exposure to some strategy, that want to have this, but for the foreseeable future, it will be much more difficult for them to connect to a European stock exchange than it would be for them to set it up on MetaMask or a Phantom wallet. And from our perspective, of course, we should provide those products in those formats for those users, because for us, it's about accessibility and really how do we bring about the next billion people into crypto?
Yeah. Yeah, to me, it feels like the compelling part is that I can use money inside of my brokerage account to easily purchase Bitcoin through the ETF. And if I'm already in the crypto world, well, then the money is, I mean, many times it doesn't just take multiple days. It might take a fee. People might have different ways that they report taxes and systems that they've set up with their accountants. So the whole concept of being able to invest in Bitcoin in your Fidelity or TD Ameritrade, whatever it is, your brokerage account, is so compelling that I'm kind of surprised you guys spent going into crypto only token ETF. I guess, would you call it an ETF is there a token ETF? Is that the right terminology?
No, it's just
Index?
We call them basket tokens. Yeah. Index basket.
Index. Yeah.
We call them basket tokens because that's the easiest way of explaining them. You have to think about how do we enable everybody around the world to access our products, regardless of format. And I'm sure that, Paul is not the biggest mobile platform, but I'll bet that bigger consumer platforms on mobile, like WhatsApp, probably have a Palm app somewhere, right? And it's circling that up at the end that's very, very important. So there's a bunch of considerations here. First and foremost, like I was saying, we don't want to miss anyone. Just because you live in a country where there may not be as reliable financial infrastructure does not mean you shouldn't get access to an easy way of getting, say, DeFi exposure. That goes against our mission completely. And so we want to make sure that everybody has the ability to do this regardless of what their infrastructure looks like. But the second thing that you have to realize, especially if you're in crypto, and we compete against a lot of these traditional financial types. We are very much not. Every single ETF, equity, stock, bond, commodity will be tokenized at some point. And so you sort of inevitably will go there, that it's very important for us to own and in fact build both markets. But you're right, 99+% of our AUM comes from the ETP side. That's not to say that I believe that will be the same mix in 5, 7, or 10 years. Yeah. And you need a mixture of addressing how the world is now while also understanding where the puck is going and building for that as well. And that's how we connect everything.
Mm-hmm. And an ETP is a European or Swiss phrase for the ETF. It's the same. They say product, we say fund, ETC, or there's different terminology, same concept. Bundling things together, having one ticker symbol for
it. The basic way of thinking about all of our products, and all of our products work the same way, is you pay money to buy whatever strategy, and it follows either a single asset like Bitcoin or an index. And we go out and we are required legally to then go and purchase the underlying cryptos and then store them safely so that everything you have is sort of physically backed by the actual underlyings. Not every financial product is like this. Obviously, there are some legacy products that have incredible premiums or discounts where you're paying $10,000, but the crypto that you get access to may or may not be worth 10,000. Maybe it's worth 14, maybe it's worth 7. And so that is what we take out. Now, in Switzerland, it just so happens that the way they call what is an American gold ETF, they would call it a gold ETP. There's a lot of nuance there, and it is geography by geography, but the base still stands. $100 worth of our shares equals $100 worth of crypto that we actually buy and store in the background and take care of them.
Who stores that? Is it stored by 21 Co. or is it stored by another company?
We purposely keep arm's length away from that. We primarily go with, heavily audited, regulated third-party custodians with the right licenses and insurance and all of the safety and security that comes from that. We work with most of the large custody providers out there.
BitGo comes to mind.
Coinbase, exactly. Coinbase, Copper, most of the top custody providers. And we probably work with somewhere between 6 and 10 different custodians, depending on the assets. And we spread things around for some diversity risk as well. It's a number of different firms, but what we ensure are they audited? Are they regulated as trust companies or custodians? Are they in reputable jurisdictions? What are their policies on cold storage? What are their security procedures, et cetera? Because one of our key services that we end up giving to our customers is the ability to manage custody for them so that they don't think about it.
When you think about the future of markets in general, today it feels like a kind of bottom-up evolution of markets that have grown out of the countries, and the countries maintain control of these markets through effectively an extension of their political power. So the United States can either approve or not approve. Like, you're not in the United States. Presumably there's some rule that some 3-letter organization has said that this is not yet allowed. Do you see this move to being in crypto? Let me be more specific. Do you see the move to the markets shifting to crypto? Everything, as you said, is going to be wrapped and tokenized. Will that create certainly it seemed like it'll have a major effect. Like, no one country will be able to influence investment decisions, investment, whatever goes into it. Frankly, I want to ask you kind of two parts to that. One is why is there still such relatively large fragmentation on these markets? I would think that there would have been by now kind of a global market where there's like, an agreed upon set of rules, and Apple can be listed there, and all of these tech companies can be listed. All the companies in the world can be listed there. People can trade. It seems like it'd be a win-win for just about every country. Is there kind of an obvious conflict of interest that structure presents, and why we have these like country specific or geo specific marketplaces?
A lot to unpack there. So first, I wouldn't say that the US or these other countries that haven't yet issued a product are necessarily anti-crypto or anti-Bitcoin or something like that. I do think that it's different geography by geography on what the needs are and what the rules are. But I think you sort of strike at the heart of why crypto and Bitcoin exist in the first place. And there are a number of different ways that you could look at this, depending on, frankly, where you are in the world and what your priorities are. But if you look at the history of the internet, when the browser was created, we thought that payments would be incorporated. One of the error codes, like, the famous error codes with 404, a page not loading on one side of it, 403 on the server side, et cetera, et cetera. We have, if you look underneath your browser now, error codes for payments not working, because that's actually how we thought about things from the very beginning, that payments should be part and parcel here when you think about a global internet of connected entities. And for various technological reasons, it didn't actually happen until much, much later, but you saw a lot of people try and fail at it, including some companies that pivoted into something much more profitable at the time, like PayPal. But PayPal initially was about this theme of internet money. You can send me a text. I think we're 3,000 miles away now, right? But even if we're 30,000 miles away, you could still send me a text that would be delivered in a couple of microseconds, versus a bunch of other barriers that we see. The very obvious one is actually movement. I think about visas, right? Each country restricts movement in some specific way. And border posts are friction points. And there's a ton of research on this there was this economist called Michael Clemens, who basically says that if the world had unlimited free movement across the globe, and the global economy is about $100 trillion or so, right? That a world of unlimited free movement around the world would I think add like $90 trillion to the global economy. We would roughly double it just by doing that. The same friction is added in any siloed system, including, as we think about it today, payments. And what you're really striking at is one of the core reasons why crypto should exist, because it should be as easy as sending a text or email as sending me $10 around the world. And actually, it doesn't work like that. Crypto makes it possible, but this is one of those clear advantages that frankly, I think there are a lot of obvious reasons why a country would want to restrict movement of money in some way. And typically it's a bit protectionist. There are some reasons around, security and making sure that there are no nefarious elements, but there are ways around that as well of not giving up privacy while not giving up core features that should exist from a technological angle. And so I think all of that comes together in a very beautiful case for why crypto is here. And ultimately, at the end of the day, sort of like when Uber was very well liked by customers, but sometimes not as well liked by the taxi cab commission or the local political party or whatever, we're getting a very similar thing. Like, people are very clearly into crypto. There are payments that we do as a company that are far easier to do in crypto than in fiat. And the people are demanding something like this that, by the way, has a lot of other positive ramifications, like privacy in an age where all of our personal data is being stolen, like privacy in countries where you may not necessarily have physical protection and rule of law in the same way, et cetera, et cetera.
Mm-hmm. Yeah, it does seem like the compelling case for an improved consumer experience, yet I'm skeptical that this transition will be smooth from being a nationalistic controlled marketplace of economic trade to one that's completely decentralized. How do you sort of discern the potential negative external, or in the case of the United States, for example, what measures do you think are realistically possible that the United States would take to prevent this transition, this capital flight from like the New York Stock Exchange, the NASDAQ to crypto land? Like when that starts to happen, pretty obviously the United States federal government, especially in these financial regulatory institutions, lose their power. And I don't think they would be happy about that. And they would likely feel justified in taking action for specifically the prevention of future harm for the citizens of the country. And also maybe they could argue it's somehow better in some other way. But do you anticipate that being a large resistance? And if so, what could it look like?
I think there's a number. So first of all, I reject the initial premise, and I will get into it. I think there are a number of reasons why what you're talking about is a bit unrealistic. We've seen some of this with the internet. So Ben Thompson's a very famous writer within tech circles, runs this thing called Stratechery. And he had an interesting post, I think a few months ago, talking about how there's now an American internet and a Chinese internet, and then possibly due to regulations, potentially a European and an Indian internet. But if you really think about it, China is the most restrictive firewall limiting kind of country and regulator. But the world's largest DeFi market is also China. So someone there is clearly figuring out how to get around and access this global internet that was created largely in the West. And so some of these kinds of things, when you look at it from a technological perspective, are pretty futile. The government cannot shut down Bitcoin tomorrow, even if it wanted to. No government could. And I would argue that, especially in the West, where we're talking about, we wouldn't want to do that. To give your readers yet another writer, Noah Smith, who runs this beautiful blog called No Opinion, I think it's noopinion.substack.com, has recently been talking about this, where a lot of the initial movement is not necessarily bad or harmful for the United States. In fact, it's quite the opposite. He makes the point, rightly so, that the stablecoin market is predominantly US dollar based, which makes over 10% of the total crypto market are these dollar-backed stablecoins, where you have dollars in American bank accounts located in America that then enable people around the world, primarily, but not necessarily in places outside of America and the West, to be able to transact, safeguard their assets in the US dollar, etc. And as you think about a bunch of countries, especially of the more authoritarian side, creating central bank dominated digital currencies, it's very likely that these stablecoins are only going to rise in value. And I'm not sure how that is a bad thing for the American dollar per se. Now, we can't predict history, but there are very clearly a number of different ways that this could go that would be a very net positive for America, for the West, for the ideals that people cherish and respect here, that it's not going to necessarily be this outcome that people are worried about. And then the good things about, I think, our structure is that you do have the naysayers. You have the people that have entrenched interests that don't want to lose power. But just the same, you also have a number of, and we're seeing them, to use America as an example, but also we're very, very active in Europe, and this is across the continent, a number of political players and regulators and industry experts and service providers that very clearly believe in the opposite and see these consumer benefits, see the inevitability of it, and want to position their geography to be the kind of winner like a Dubai or Singapore, or indeed London, New York, San Francisco, in attracting from around the world when others may be not as quick, not as smart. And as someone that really enjoys the West and enjoys, living and being part of it, I really do hope that we don't lose sight of the massive once in a lifetime opportunity that we have here as well.
Yeah, no, I agree with you that it feels inevitable given a long enough time horizon. And I only look at like maybe a parallel industry that comes to mind recently because it's topical, psychedelics. Psychedelics hold a lot of promise for mental health, but in the late 70s, they were banned. And so for 50 years, 40 years, there was no research, zero progress. You could argue, how many people committed suicide, struggle with mental health issues that could have been solved had there not been government intervention in banning this completely. And now, just recently, this is starting to become more legalized and recognized. But there had been an overt like war on drugs and just like banning things across the board. And my concern is, how do we do more than hope about making sure a similar thing doesn't happen in crypto? Because if you look at it, it's kind of an interesting parallel, because in psychedelics, there was a lot of promise, a wide popularity across the late 60s, particularly in the United States and California. It wasn't as if it was like a fringe thing. So it felt very much widely accepted. And then there was kind of a revolt attitude around Vietnam. There was a catalyst for attention, and then there was a banning. And at that time, there really was not even close to enough counter resistance to, go against effectively the United States military and what would have been, that physical conflict. But today it feels that, yes, I agree with you that inevitably crypto will become a decentralized worldwide market. But China has recognized that this is a potential threat to our political power. And so we're going to ban it nonstop, just cold start, right? There's no trade in and out of China. I think you can legally hold, but you can't move crypto. But effectively, they've taken a hard stance on that. And so they can see a rational threat to their power. I don't think the United States has recognized that threat, but I don't see it as more than, a few influential politicians start getting together. You made a good point. There are some politicians that are clearly like supportive of Bitcoin and crypto, but most of them are silent and almost still to cast a vote. And that's where I'm like, what? Clearly the line in the sand they could draw is no one in the United States can trade crypto. I mean, if they decided to pass a law, they could do that. And then then you'd have to choose. And I wonder about that, right? It's like still the dust is not settled on this.
Yeah, I think the situations are very different, right? Because so we can talk about the inevitability of things, right? China did ban crypto across the board, pretty draconian ban across the board. How is it the world's largest decentralized finance market, right? Like
Wait, can you explain that a little bit? So largest decentralized finance market, meaning
so decentralized finance being Ethereum wallets and being able to purchase through decentralized exchanges. Yes, you can't access Coinbase or Binance or centralized exchanges from there, but nothing stops you from getting around the firewall in a number of ways that we know are possible and interacting with the outside world. And so in the same way that there are a lot of Chinese visitors of YouTube and Google services and things like that, they will find a way to it if there's enough of a consumer need. So I think the inevitability of it is very real. Like when you talk about no one in the United States can do this, no one in China can do this, what does that mean in practice? And how many people derive a benefit from exercising it? Because in the case of China, I wouldn't say that's actually a successful ban based on what we're seeing. If in fact, part of the rise of DeFi is probably attributed to that because it's pushed a lot of that out. That's one part of it. The other part of it is certainly the people that are pro crypto in the United States happen to be influential, connected, elite folks who naturally have a lot more power and sway. And especially as you start becoming more intellectual about it, this great knee-jerk reaction of this will be a net negative for the United States, I would argue all day and night against, right? And so I think there's a huge educational element here, but if you're a rational, logic person, you will see the opportunity, which is part of why we're working on additional listings across the globe. And I wouldn't say that we have run into a single regulator around the world of many different cultures that is just virulently anti-crypto for some random reason. There's educational issues. There are all these myths that we need to bust, but there's an incredible opportunity. The last thing I would say is that this is very clearly a situation where someone will let this happen and build a thriving ecosystem out of it. And if it's not us, it's going to be someone else, much to our detriment. You see a lot of very large, very new, very transparent, very not so much countries around the world trying to build infrastructure around crypto. Switzerland is a great example of this, but Switzerland is now competing against Dubai and Singapore and all of these different jurisdictions on who can provide the most fertile ground. And given the incredible wealth of talent, resources, the history that we in this country have had in building all of this, boy, would it be a tragedy for us to miss new epoch that could be as large as the internet, because we certainly did not miss the internet. And look at how much value we've gotten, not just from a commercial and economic standpoint, but from a social standpoint, from a national security standpoint. It still, benefits the West greatly that the internet remains a Western controlled entity. And while control in crypto is not going to be possible in the same way, certainly things like better regulation, certainly things like stable coins. The US dollar is dominant on stable coins. There are alternative currencies that could also be stable coins if that is no longer an attractive option. But I would argue really strongly that that is a net positive for the US dollar, and therefore a net positive to America, and therefore a net positive to Americans as well. Again, just using America as an example, but I think this is one of those where if you provide a fertile ground for crypto, it's like providing a fertile ground for startups. And certainly while there's a Silicon Valley, there's also a lot of other ecosystems that benefit all of those countries tremendously. And I would expect to see more of that, not less of that. And based on my behind the scenes conversations with the people that think about and decide these things, I'm not as worried. I think we have a lot of education to do, and it's so early. They're very similarly to how the internet developed with a lot of scams and a lot of nefarious players. We're seeing, unfortunately, some of the same activity, but it's all noise that is distracting us from A, the real product and progress we have today, and then B, the real unfathomable potential of what this could be.
Yeah. No, the only thing I hang up on is that I think of the United States' federal government, particularly as an entity in which to recognize a distinguished set of incentives from the citizens of the country. And that entity carries a momentum or like residual cultural value and the recognition of the US dollar as being powerful. And that is why we have the USDC and Tether as being significant parts of the crypto universe. I do think that will eventually change. It's set to change because the United States' political influence in the world will always, every country will change. The United States seems like relative to China and India is going to decrease in relative influence around the world. And as such, I would assume that the means of liquid transaction on crypto is going to have pressure to change from USDC to Tether. Like, it wouldn't surprise me if a year from now, some politicians get together in federal government and say, we're going to pass a $10 trillion bill and give it to all the Americans. And now if I'm in another country, it's just massive disincentive to hold this, why am I holding, it's like kind of worst of both worlds. Why am I holding a crypto stable coin that's tied to a fiat's ability to print money? And I would imagine, it seems like, I want to ask you this, we have long-term store of value in Bitcoin, seems like well-established. Bitcoin Gold is almost cliche to say, Bitcoin as a replacement to gold. It seems like kind of the tectonic plates that are still shifting are what's going to be the everyday medium of exchange that people use equivalent to cash. Maybe that centralizes on one kind of currency that's fast and easy to use. Maybe it's like Lightning, which is a branch off of Bitcoin. Maybe it's 100 different things. Do you have a take on what that replacement to USD will be in crypto?
I think it's way too early to really see that. It's quite early. I want to give you a counterpoint though to your main argument. Clearly after World War II, America had a disproportionate share of the global economy that led to some of this reserve currency status shifting. from whatever it was before, the pound sterling maybe to the US dollar. And that has had positive effects on America. And depending on where you are looking at this from, maybe different effects. It doesn't change the fact that a lot of the buyers of Tether, a lot of the buyers of USDC happen to be non-Americans. And they're clearly voting with their feet, so to speak. And the alternatives are not wonderful, depending again on what your view of the world is. And I think this is part of what Noah Smith was talking about, is that there's a ton of actual capital flights from some of these competing geographies into the US dollar, into this ecosystem that's actually pretty interesting. And the counterexample that I'm providing here is a country that's very, near and dear to my heart, especially now, is Switzerland. Never reached the status of the United States as a global superpower, but the Swiss franc is still a very, very highly respected store of value, regardless of their waning influence overall. And so will the US economy be the absolute largest in the world in 10 or 20 or 30 years? Probably not, based on what we're seeing from a few other players. Does that necessarily take away from the attractiveness of America as an investment market or the dollar? Remains to be seen. And is there a way of doing that such that, the Swiss franc being one thing, but Switzerland has benefited from people safeguarding their assets, both in the Swiss franc as well as in gold, which is an unrelated currency. I know I've lived in Switzerland for quite some time now. I've yet to see a gold mine. It doesn't have that resource at all, but clearly they've benefited from that as well. And so I'd imagine a mixture of crypto and US dollar stablecoins being a net positive for America and the West. I would imagine other stablecoins will pop up and will become popular as well. But I'm still not completely sold that this is in any way, again, if we play it right and not really mess up this opportunity, could still be a very net positive. And if in fact could be a detriment to other approaches and other competing approaches.
New York City, New York State certainly has a lopsided influence in the world's financial markets. They clearly have a set of circumstances in their regulatory and policy state today that you can't operate. Many other crypto companies don't operate. Their taxes, I think, are the highest in the country, yet it's still next to impossible to find an apartment there. It feels like it is a paradox of sorts where they have, maybe in lieu or in spite of all of seemingly really destructive policies, they have sort of cultivated enough momentum of economic activity to keep the thing going. Do you think New York is shooting itself in the foot with the policies they currently have? I would presume that you're going to feel the answer is yes, right? Like you can't operate, you would like to operate. I would imagine they should change their policies. Do you feel like New York is like about to drown themselves and headed the wrong direction? I mean, that's my sense, is that they're just trying to preserve an old school way of doing business, i.e. Wall Street, and just clinging on to that. And then the fintech sector in Wall Street becomes less and less relevant. What do you make of New York, their policy and their influence?
Yeah, I think there are a couple of ways of looking at this. We spent some time in a real failed city, San Francisco, and clearly, and clearly the policies that were done by that local government has contributed greatly to the GDP of Austin, of Miami, and the exodus as we've seen it. Like, not in my wildest dreams did I expect for this to happen this massively, this quickly. And I think
when did you move out of San Francisco?
2017.
Yeah.
So
okay. So you were
the height of. I remember.
Yeah.
Good.
Yeah. Buy low, sell high.
Whatever's happening here. It was exceptional timing, honestly. But I sold a company and the acquirer was in New York. So I actually, that's not me being so prescient and intelligent. It just happened to work out well. And I think that's the clear danger for any geography in being a hotbed of some activity that you regard as particularly valuable, and then doing things to antagonize it in a variety of ways. I think you're talking about a few laws that were probably written by people that are no longer in power. And certainly some of the recent developments in New York are promising. I think the new mayor, Eric Adams, seems to be not antagonistic towards crypto, wants New York to continue being the crypto hub. We see a ton of activities in Brooklyn, especially of a lot of very core crypto developers. Crypto is much more international, but a lot of the development is still happening in America, and a lot of the talent is still here. And I think that he's been doing a lot of the right steps, moving in the right direction. Obviously, I would love for it to be even faster, but if it's, and I would love as a person who's, I went to university in New York. I live here. I want them to figure it out, but clearly if they don't figure it out in time, someone else will. And I would say that's true, not just of the city, but the country.
What if you're in charge of, I'm not sure if I'm not quite sure how much influence the mayor has in the financial policy, but say you could, rewrite the book, so to speak. What do you do first in New York? Speaking about New York specifically.
I think that overall you need to lower the friction. You need to lower the bar of what it takes to build a new startup. That's just a generally speaking good policy to have, right? Imagine back in the day when it cost $10 or $20 million in a seed round to build a startup, you were getting less interest, and you're getting less interested from diverse groups that may actually contribute to the innovations behind it. Right now, starting a crypto company in, say, New York versus Miami, New York is harder. You need more money. You need to pay more lawyers. You're more restricted on all of that. I don't think that makes much sense for a very new, rapidly developing technology. And so it's a mixture of satisfying the very real concerns that regulators have around, sandbox usage and things like that, while not constraining it so much that some of the world's largest exchanges, which operate in the other 49 states, restrict New York specifically. And I don't understand, as someone who spent a lot of time in this city, I don't understand how that's going to be a net positive over the long run.
Yeah. Well, I'm glad that there are other states that have taken, part of the beauty of the United States is there are different experiments you can run in different states, and we can see the results of that. And we can acknowledge that San Francisco didn't work out. Policy is there. You can move to a new place. You have the ability to vote with your feet, which is arguably more important than the ability to vote with a voting booth. Because it's like, there's so many other things you vote on when you move with your feet than you do by casting one vote for president.
And by the way, the other thing is, do we necessarily want New York to be so dominant in this decentralized new future? What is wrong with Wyoming setting up a bunch of these bank charters that are going to be wonderful for the space and attracting investments and talent and people to Cheyenne? Well, in terms of Bitcoin mining, Texas is massive, and we hear a lot about it at West Texas and the wind and all of that. But one of the largest markets, if not the largest market for mining in the United States, is actually Georgia, which is unexpected. The exodus that we have seen has been a very net positive to Miami. Certainly a city that is going to have a tremendous amount of challenges, from an environmental perspective with rising tides and issues economically, et cetera, in the future, redefining itself as that. So I'm not necessarily sure that we should be so fixated on one particular state or city. It would be sort of like us. And I think we both love San Francisco at some point in our heart and love the network and love what we've experienced there. But, to go back and ignore everything that is happening elsewhere in New York and Miami and Austin and concentrate on, no, San Francisco has to be the center of everything. I'm not sure that's the right approach or not. I hope it does. But if it doesn't, someone's loss is another person's gain.
Yeah. No, I think these are such important conversations to have, because clearly there is unexcavated gold, so to speak, of wisdom in the philosophy of operating a city and the method of determining what policies are correct, because we elect people and they run the government. And in San Francisco, there's very smart people with plenty of money, and yet they come up with they end with the worst result. So somewhere along the line, there's like a chaotic,
something's missing.
Yeah. And it's like, okay, do we have the wrong people in the job? Do we have, what are we doing? And without going into detail on San Francisco, I think it represents a bigger pattern that is super.
And it's part of why competition is very, very good.
Yeah. Yeah.
And that's what happened to San Francisco.
You mentioned Noah Smith, Ben Thompson. Are there other people that you've read or follow that have influenced your thinking in the last few years or since you've gotten in?
I think John Oliver has this funny quote of like, crypto is everything people don't understand about economics, Venn diagrammed with everything they don't understand about technology. And so I'm a very big, I studied history in school, and I'm a very big fan of understanding the trends that got us here today. So I actually read a ton of financial history. You see a lot of parallels to what has happened before. And I would push people on not just reading about crypto, but sort of understanding this in a more macro sense and understanding our place in history, whether you think there's a new global superpower, a new reserve currency, whether you think there's a new technological innovation. We've seen all of these inflection points several times before. Go and read about them. And then none of us know the future, right? But it's important to have that base of knowledge when we're having these kinds of discussions, because frankly, I think we could, at this company, and we're a very small part of the crypto universe, I could see us working on this for decades to come, while it's still being built slowly. And so that's what I would recommend people to go and read about. Crypto is very influenced by Austrian economics. It's influenced by the failures of the past in the 1990s with the cipher funds. And a lot of those concepts, I think people sort of just know the headline, maybe just the label, but don't really dive deeper into it.
Any particular books or people that stood out to you that you've read that have sort of
I would start with the more macro historical guides. I think Nathaniel Popper, who I believe is I want to say New York Times columnist, wrote this very nice history of crypto's development. The Bitcoin Standard, Lebanese author, I think his last name is Amos, describes a thesis that is agreed on by a lot of people in crypto. Ludwig von Mises, who's the father of the Austrian School of Economics, his stuff is probably a little bit too thick, but there are probably a bunch of very nice summaries out there. Ray Dalio's new book is interesting in that it does talk about these inflection points and it puts them in a good place in history. By the way, I mentioned three works there that I don't necessarily agree with 100%, but it influences my thinking, and it's important to develop a fuller picture of that. And then you start to understand, decentralization as it exists today. Let's go back to Lehman Brothers. Let's then go back to the concept of double entry bookkeeping, which was created by this Franciscan monk and has religious implications. And it actually, I just went through 1,000 years of history very casually, but it drives, I think, Bitcoin, Ethereum, the blockchain today. And that's underappreciated, and people should really dig deeper into that, with those being good entry points. And then my favorite part of every book is the endnotes or the footnotes, depending on the book. Delve deeper into that.
Have you read or listened to any of Balaji's recent work with the network state?
Yeah. And I think it's quite interesting. And again, it's one of those themes that keeps coming back in history. I remember watching a debate, I want to say in 2012 or thereabouts, between Mark Andreessen and Peter Thiel. And part of what they were arguing was, will more countries be created or less? And the crazy thing is that we have 193 countries today, maybe 194. I would imagine we have probably less than 50 countries at some point in the 1900s. That's pretty spectacular growth. And then you get these interesting, you talk about, the entrenched interests having an issue with it. The president of Kazakhstan, which is so ironic, Kazakhstan, meaning the land of the Kazakh people, has publicly stated that he's against self-determination. Why? Well, it would create another 600 plus countries. And so you start seeing all of these things in a lens of, we've seen this before, we've heard of this before, things come and go in different ways, and entrenched interests will react to them in specific ways. And this may or may not have some implications on the current style or the current phase that we're going through. And so I would encourage a lot of people to, again, look at all of this and read it not just from a Western perspective, but study, how these have happened in other cultures as well.
Yeah. Yeah. I love it. I know you're from Egypt too and have lived, maybe spent time in Switzerland and traveled all over the world. So I always find it fun to talk to people who are exposed to different cultures and different ways of living and different policies, etc. Hey, this is super fun. Congrats on everything. And,
Always a pleasure.
Yeah. Are you actively writing or tweeting personally?
I'm at Hany on Twitter.
That's a good one. Hany.
Every day. Yeah, I've been there for a long time.
Yeah, yeah.
So at Hany, the company's at 21Shares and at Amun, AMUN, and you can find a bunch of my retweets and thoughts there.
Sweet. All right, brother. Thank you so much. This is fun.
Thank you for having me.
Cheers.
This is fun.